I'm Sean Reynolds from Summer Properties Northwest and Reynolds & Klein Appraisal. And today I have with me Mr. Dan Chapman of Fairway Independent Mortgage. We're going to do a quick video here on interest rates. So Dan, tell us, where are interest rates right now today? We are February 7th, 2018. On a typical residential home, what are you looking at for an interest rate loan?
So conventional loan, primary residence, right now rates are around 4.25% to 4.5% for most people with decent credit. So that's where they're at right now, and rates are going up, so they're slowly starting to go up. We're in a bear market for interest rates right now. First time it's been that way in a few years.
And what's causing the interest rates to rise at this point in time?
Well, the number one thing that's causing rates to rise right now is the Federal Reserve is doing what's called tapering of mortgage-backed securities purchasing. So they're not going into and buying as many as they used to, and they've said they're going to do that. So each month they're going to do a little bit less purchasing of those and a little bit less mortgage-backed securities, which is where the Fannie Mae and Freddie Mac bonds are traded, and the 10-year Treasury as well. So they're not buying as much Treasuries. Those are the two places where traders are trading to make rates stay low. And when they put money into those two vehicles, rates go down. When they pull money out and they sell, rates go up. And that's what's happening right now, is they're selling and they're not buying.
So the bottom line to the typical consumer is the interest rate on any kind of mortgage is going up. How much of a bump up have we seen? Like what's the current trend?
Yeah. Over the last 30 days, rates have gone up about 0.25%. A little faster than I'd like to see.
And what does that translate to as far as dollars on, say, I don't know what would be a good measure, a $100,000 loan, $250,000 loan?
Yeah.
How does that impact?
Yeah. On a typical $250,000 loan, if rates were to go up, say 0.5%, which they're going up 0.5% from, they're going to go up 0.5% from at least where they were in November, because we're already up 0.25%, and I think they'll go up another 0.25%.
Where were we in November? Roughly
3.875, 4%, roughly.
Okay. Hair under 4.
Yeah, right around there. And so rates, on a $250,000 loan at 0.5%, that's about $75 a month. So on a $500,000 loan, that's about $150 a month if rates go up 0.5%. And I see rates, by the end of this year possibly being as high as 5%.
That's a huge bump.
Yeah. I'm hoping they stay under 5, like 4.75. But I think for sure we're going to see 4.75 by more than likely by the end of this year, maybe 5%. So.
And another huge impact this has on the consumer is the first-time home buyers' ability to qualify. Every time that interest rate bumps up, their ability to borrow basically goes down. Yeah,
it goes down. I mean, they could qualify right now maybe for $50,000 more in purchase price, whereas if 6 months from now, that $50,000 may be gone because the rates went up.
And so what are you recommending to your first-time home buyers right now? What are you telling them? What are you coaching them to do?
I always do a buy versus rent analysis for them on a spreadsheet, and when they look at that, typically they're blown away. They had no idea of the benefits, of all the different benefits that it lists. That's another video topic, but that's what I do, and I go over them, the benefits of homeownership and equity appreciation and principal pay down, tax benefits, and then talk about rates. Here's where the rates are at now. If they go up 0.5%, what would your payment look like? Not including appreciation in the home, because values are still going up.
And so is everybody else in the mortgage industry, is everybody pretty much on board with the concept that rates are going to go one way at this point in time, and that is probably up?
Those originators that pay attention to that and don't just lock loans when they get them, like myself, I subscribe to a service called Rate Alert. It's pretty detailed.
I see that on some of your posts.
Yeah.
It's like a direct feed.
I actually have a live screen up all the time of the mortgage-backed securities and see how they're trading. So I know if we're going to get a rate change. Sometimes we'll get a rate change during the day. Today we got a price for the worst today. Pricing went up.
Okay.
Pricing went up from this morning's rate sheet that came out. It went up.
And I've seen some of your posts where you've said, hey, based on this feed, here's the information, this is what's going on.
Yeah, I try to post that at least once a week to let people know here's what's happening with mortgage rates. This affects your pricing. Knowing when to lock a loan it can save people thousands of dollars.
Okay.
So.
Well, Dan, thanks so much for joining with me today and
You're welcome.
shooting this quick video. I just wanted to get an idea of where rates are, where they're headed, what consumers can expect. And so we, at the end of this video, we'll post your information.
Sure.
If buyers out there or if real estate brokers out there have mortgage-related questions, they'll have your information to reach out to you. But thanks so much for joining today, and appreciate the information.
Thank you for having me.
All right. I'm Sean Reynolds from Summit Properties Northwest. Dan Chapman from Fairway Independent Mortgage. We'll see you on the next video. Thank you. Bye.